The chart on your screen is a beautiful lie. It is a siren song, luring your account onto the rocks of ruin with its elegant patterns and colorful, comforting indicators. You have been taught to trust it, to find security in its lines and oscillators. You believe that by mastering these geometric shapes and mathematical formulas, you are mastering the market. This belief is the single greatest reason for your failure. 80% of speculators look at a chart and see a map to riches. I look at the same chart and see a graveyard of failed theories, a monument to hope and greed. They are searching for a system that removes the need for judgment. They want a mechanical signal, a flashing light that says, buy here and sell here. They want to trade without thinking, without feeling, without taking true responsibility. And the market is more than happy to accommodate them by taking every last dollar from their account. The entire education of a speculator today is fundamentally flawed. It is an exercise in looking backward. Your indicators, your moving averages, your RSI, your MACD, they are nothing more than elaborate histories of what has already happened. They are an autopsy of yesterday's price action. And you are trying to use an autopsy to predict the health of a living, breathing patient. It is an absurdity. The market does not care that a stock is overbought or that two lines have crossed. These are arbitrary events based on a formula that has no connection to the real forces of supply and demand. They are distractions, designed by men who sell books and trading courses, not by men who make their living from the market itself. The lessons I learned were not from a textbook. They were carved into my soul by catastrophic losses. My entire life's work, the victories and the crushing defeats, is documented in Reminiscences of a Stock Operator. You can find the link in the description of this video. Study it, not for my wins, but for my mistakes. They were bought at a price you cannot afford to pay. My education began not with charts, but with numbers. As a boy in the bucket shops, I did not have the luxury of pretty pictures. A bucket shop, for those of you accustomed to modern, regulated exchanges, was a casino that used stock prices as its roulette wheel. They did not actually buy or sell stock for you, they simply took the other side of your bet. Your loss was their direct profit. The prices were fed to us on a ticker tape, a constant stream of paper printing symbols and numbers. My job was to write these numbers on the big board for the clients to see. All day I watched numbers. Not patterns, not indicators, just the raw, unadorned price. And after a while I began to see something more than just numbers. I saw behavior. I saw habits. I could feel the pulse of a stock. I kept a little notebook recording these price movements, and I discovered that they were not random. They moved in predictable ways. History was repeating itself, not in pictures, but in numbers. I learned to recognize the signs of strength and the signs of weakness. I could tell when a stock was being accumulated by a powerful interest, and when it was being carefully distributed to an unsuspecting public. I did this without a single chart. I was reading the tape. The tape, in my day, was that strip of paper. Today, the tape is the price bar on your screen, the volume bar beneath it, and the time and sales data flashing by. It is the only truth. Everything else is a second-hand opinion. When you fill your screen with a dozen indicators, you are blinding yourself to the tape. You are trying to read a man's intentions by studying a photograph of him from last week instead of looking him in the eye and watching his actions right now. The modern trader has been convinced that this raw data is too simple, too primitive. He believes progress means complexity. In speculation, the opposite is true. The path to success is a path of subtraction, of removing everything that is not the essential truth of price and volume. I paid a fortune to learn that my own brain could be my worst enemy. Early in my career, after I had made my first real stake, I began to think I was cleverer than the tape. I would see a stock run up several points and my mind would scream, "It can't go any higher. It's due for a reaction." I was anticipating. I was trying to outguess the market. A chart pattern might suggest a pullback. My own sense of logic would demand one. So I would sell my position, looking to buy it back a few points lower. Sometimes it worked, and I would feel like a genius. But more often than not, the stock would dip by a point, or not at all, and then resume its march upward, leaving me behind. I had sold a position that was showing me a handsome profit, a position that the market itself had validated, all for the sake of trying to scalp a few meaningless points. I had abandoned the great, powerful trend for the sake of a clever little theory. The great speculator Old Man Partridge taught me the cure for this disease. His friends would come to him for tips, and he would simply say, "Well, you know, it's a bull market." He wasn't being coy. He was stating the single most important fact. He bought his stocks, secured his position, and then he sat tight. He knew that the big money was not in the clever buying and selling, not in catching the little dips and rallies. The big money was in sitting. It was in correctly assessing the main trend and having the courage, the sheer fortitude to ride it. Your charts and your indicators are the enemies of sitting tight. An overbought signal from your RSI is a whisper of fear in your ear. A moving average crossover is a siren song of doubt. They tempt you to act constantly, to trade the noise, to believe you are managing your position when in fact you are simply whittling away your profits and your nerve. The chart tempts you to anticipate. The tape demands that you react. The amateur anticipates. The professional reacts. The chart is a liar because it presents patterns as signals. They are not. A pattern, be it a cup and handle, a head and shoulders, or a flag, is merely an area of interest. It is a formation that suggests a battle is being fought between buyers and sellers, and that a decisive move may be imminent. Most traders see the pattern, draw a line in the sand, and place their buy order the moment that line is touched. This is financial suicide. A line on a chart has no power. It is the action of the stock as it approaches and crosses that line that tells the whole story. This is the principle of my pivot point system. I would identify a critical price level, a point which, if crossed, would signal that the path of least resistance had changed. But I would never ever buy it simply for crossing the price. The confirmation was everything. When a stock came to a pivotal point, I watched it with the intensity of a hawk. If it crossed that point, I needed to see its character change instantly. It had to move with speed and authority. Most importantly, it had to do so on a dramatic increase in volume. Volume is the gasoline in the engine. Price is the movement of the car, but volume is the force that creates that movement. A breakout on low volume is a fiction. It is a trap laid by professional operators to catch the public. They nudge the price just over the line to trigger the buy orders of all the chart watchers, and then they sell into that artificially created demand, leaving the amateurs holding worthless positions. A true move, a move you can risk your capital on, is unmistakable. It explodes with energy. The volume bar is immense. The price doesn't hesitate. It lunges. This is the tape confirming the promise of the chart. Your indicators cannot and will not make this distinction for you. They will simply tell you that a price level was crossed. They are blind to the character, the spirit, and the force behind the move. The most dangerous lies the chart tells are lies of omission. A chart shows you price history, but it does not show you the underlying conditions of the market. It cannot tell you that credit is tightening, that the men with the real money are growing cautious. It cannot tell you that while your stock is making a new high, the rest of the market's generals, the other leading stocks, are beginning to falter and break down. This is information that you can only get from reading the broad tape, from observing the entire market as a single living entity. In the months leading up to the Great Panic of 1907, I was on vacation, far from Wall Street. But I felt an uneasiness I could not shake. I was profitable on the long side, yet something felt wrong. My charts, had I been looking at them, would have shown me no reason to sell. The trend was still up. But I couldn't ignore the feeling. It was the subconscious memory of 1,000 other market battles telling me that the atmosphere had changed. I cut my vacation short and returned to New York. I did not need to look at a single chart. I sat in my broker's office and I watched the tape. The story it told was terrifying. Call money rates, the interest brokers paid for overnight loans, were astronomical. This meant cash was scarce and dear. The lifeblood of the market was draining away. I saw leading stocks attempt to rally in the morning on good news, only to see those rallies fizzle out on weak volume and then fall back by the close of trading. This was a classic sign of distribution. The insiders, the smart money, were using the good news as an opportunity to unload their shares onto a hopeful public. There was no aggressive, intelligent buying. There was only the desperate selling of those who were being forced to liquidate. No indicator would have warned me. No chart pattern could have captured this atmosphere of impending doom. It was written only on the tape, in the language of price action and volume, for anyone who had the wisdom to read it. I saw it, I acted upon it, and I switched from the bull side to the bear side, positioning myself for the coming collapse. The chart readers were all wiped out. The tape readers survived and prospered. What the modern trader calls technical analysis is a perversion of true tape reading. It is a lazy man's attempt to systematize an art form. You cannot reduce the market to a simple, predictable machine. It is a battle of human emotions of fear and greed on a colossal scale. Your job as a speculator is not to predict what will happen. Your job is to align yourself with the dominant force in the market at any given time and to get out the moment that force begins to weaken. This requires judgment, not calculation. It requires you to observe and interpret the present, not to forecast the future based on the past. Therefore, you must unlearn everything you have been taught about reading charts. You must wipe the slate clean and begin again with the first principles that I learned as a boy posting numbers on a blackboard. Here is the unshakable rule you must follow, the foundation upon which all successful speculation is built. First, your chart must be clean. Remove every lagging indicator, every moving average, every oscillator, every band. They are crutches, and you will never develop the strength to walk on your own if you rely on them. Your chart should contain only two pieces of information: price and volume. Nothing else. This will force you to look at what is happening now, not at a mathematical echo of what happened last week. Second, you must understand that a pattern is not a trade signal. A consolidation, a base, a flag. These are simply areas where a stock is gathering energy. It is a question mark on the chart. Your job is to wait patiently for the answer. The answer comes only when the stock breaks out of that pattern with a decisive increase in volume. Do not act on the question. Act only on the clear, unambiguous answer. Be willing to be a little late to the move in exchange for being certain that the move is real. That small price you pay for confirmation is the best insurance in the world. Third, you must stop anticipating and start reacting. Never try to buy at the bottom or sell at the very top. This is the domain of fools and liars. Let the market make its move first. Let it prove to you that the bottom is in by breaking an important downward trend line and establishing a new pattern of higher lows. Let it prove to you the top is in when a climactic run-up fails and the stock begins to break key support levels on heavy volume. Your ego wants to be the first one in and the last one out. Your bank account wants you to be the one who is on the right side of the major trend. Listen to your bank account. Finally, you must expand your vision beyond a single chart. A stock does not exist in a vacuum. It is part of a group, and that group is part of the overall market. You must learn to read the tape of the entire market. Are the leading stocks acting well? Is the market absorbing bad news without breaking down? Is there broad participation in rallies, or is it just a few stocks carrying the averages higher? This is the context. Trading a stock without understanding the context of the general market is like trying to navigate a ship without knowing the direction of the tide. The most beautiful chart pattern in the world will fail if the tide of the general market is flowing against you. The charts do not lie precisely. They simply tell an incomplete story, and they tell it to you in a language designed to be misinterpreted by the hopeful and the lazy. The truth is not in the pattern. It is in the force behind the pattern. It is in the volume, the character of the trading, the behavior of the leading stocks, and the tone of the overall market. This is the art of tape reading. It cannot be mastered by reading a book or by applying a magic indicator. It can only be learned through thousands of hours of focused observation, of burning these patterns of behavior into your mind until you can feel them as I did, as a living, breathing force. Forget the easy answers promised by your indicators. Embrace the difficult, nuanced work of reading the tape. It is the only path to survival, the only path to victory.